So, welcome everybody. Thank you for joining us. Those of you who are not regular TRG, this is, of course, a special public attendance session. So, we've got a variety of folks from the Facebook group and other parts out yonder. So, welcome everybody. This is going to be a session where Jeff is going to talk about a specific topic, which is a little different than the usual sessions we do, the daily live trading sessions, where it's just watch over a trader's shoulder and hear their stream of consciousness as they trade. This time, there's actually a specific topic, specific theme, and that's going to be talking about how you can use what's happening in ES if you're actually an NQ trader. And there are some very important things that are worth knowing about the way those two instruments interact. Not quite interact, but whatever, how they respond to one another and how they correlate or don't, etc. So this should be a really interesting session, particularly for those NQ traders out there, which I know there are an awful lot of, because NQ is where all the action is. And, may or may not always be a good idea to be seeking action in the markets, but a lot of people do. So NQ is the go-to for that. So general housekeeping for the Zoom session. Please don't post links in the session. It should be okay. There used to be some security issues around that. We believe that's been fixed, but still, it's just generally preferred that people not be sharing links in the chat. I did include the link to join if you've got friends or anybody like that you want to invite to this. In fact, I will do it again in case a few people came in after I pasted it. I don't remember. And the chat is open, so feel free to ask your questions. Keep in mind that if Jeff is focusing on his trading or on something he's pointing out or what have you, he may not get to your question for several minutes, potentially. It could be 5 or 10 minutes, which means by the time he sees it, if you didn't include any context other than, you just said something like, can you explain more about that? He's not going to have any idea what that is. So try to include some context, try to be as complete and thorough in sentences and what have you with your questions as possible, and they will get addressed. Other than that, I think we're pretty much ready to go. Is there anything else I missed, Jeff?
No, that was perfect. Thank you. I just wanted to point something out about, and I'm going to point this out regularly throughout this session. There's the open is a momentum event. And as the market kind of reprices whatever happened overnight with volume, and the idea of trading NQ against the ES liquidity and the ES kind of turns is somewhat predicated on correlation. And we are well correlated to the upside, but NQ is leading by a little too much. We're and that's not negative. It's just hopefully, once the session gets going, these will get closer together. We're not that far apart. Yeah, RTY and NQ are leading. The percentage change is what I'm talking about here. So, but for this to work really well, the best conditions are low volume, which we clearly have, and good correlation. And I'm not just looking at the correlation of the session. As you can see, I'm watching the correlation real time right in front of us between NQ and ES. And that's one of the points of this whole session that I'm going to be making quite a bit. Is it's uncanny if you just watch the short term. These are 10-second equivolume bars on the left side of my screen here, the second from the left anyway. And the short term action from a geometry point of view is almost identical, and that's most of the time. So that's instantaneous correlation, and clearly we have that right now. We bounce to the edge of the range perfectly on both instruments. That's what I'm measuring here, is a very short-term range like I am here, but not with the geometry, with the actual order flow. So anyway, this should be a good day for this, but I'm hoping we get a little more correlated, and I think we will. Let's see, other things. This is probably not a bad time to just give you a real quick overview of what I'm looking at for, to get it on the recording, if nothing else. You're welcome to ask questions about this along the way, and I may or may not have time to answer them. Far left of my screen, first of all, I'm on 3 monitors. You're only seeing one of them. This is a wide 38 WQHD LG, and there's a couple of portrait 4K monitors to the left of it. So I'm seeing some things that you guys aren't. Once we get open, those are kind of worth keeping an eye on. Like I've got a plot from an old Thinkorswim platform of the internals in the market. And I'm also looking at the 30-minute footprints, which To make it easier on you, I've got one of those I can pop up here when I'm talking about it. So this is the 30-minute footprint. You can see we've got unfinished business at the highs. Probably we'll revisit that shortly. So I'll bring this up when I need to make a point about that. But understand, I'm watching that on another monitor all the time. So and also I've got the session footprints running on my other monitor, so I can kind of see not just the instantaneous correlation, but what the edges of all the other instruments look like. So, we know the edge of ES has unfinished business at the moment, and I can see that's not the case in RTY and NQ, but it is the case in YM. Also has unfinished business up at the top. So, and some zero prints right above the top too. So anyway, I'm watching that on another monitor. If there's something really important, I might drag it over here to show it to you, but keep that in mind. Okay, so far left of this screen that you're seeing is TPO view. So these are the sessions broken out into the overnight and regular. And so I'm just doing this for context. Where are we, in the couple of days, couple of weeks scheme of things? And this is a critically interesting spot. Look at this back here. It was like the 13th through the 17th of May. We kind of formed that top, and then boom, we had that big hard sell down day, and then we consolidated and we sold down again, and then we came back up into the range. And guess what? We're back up at where we broke down. So what does that mean? Well, if you're looking for a downtrend, this is a spot it's likely to continue. Maybe it's probably likely to go up here first and take out this poor high and clean up the unfinished business that we saw on the 30-minute a minute ago. And so very interesting setup both directions. And YM looks very similar. NQ hasn't been quite as strong. You can see it's still at the low end of its old range, and RTY broke out of its old range. So that could be off to the races if we get some buying. Keep in mind also, so today is the last legitimate trading day of the month. And so, funds are going to be cleaning up their books. And I was thinking about this yesterday and actually trading against this kind of concept yesterday and not remembering that it was Thursday and today's Friday. So that's a typical thing at the end of a month. There's a lot of options positions and futures positions that are being closed out and rolled over, and they're hedging other equity positions. So lots of stuff goes on. And well, it's not the end of the month, Jeff. Well, the 30th is a holiday in the United States. It's a short trading day. And then Friday is the actual end of the month. Obviously, most funds don't wait till the last day if they're going to do something. There will be action that day too, but particularly with a holiday weekend, I would be much more, it's much more likely they would be doing whatever housekeeping they need to do today. So that could be interesting. We could get some energy out of that. Sometimes that occurs at the close of a day like this. So you might see that kind of fund activities in the last hour and a half when a lot of them like to trade. So that's that. So that's just some context about what's going on. Let's see, what else do I need to tell you guys? If you're totally, and by the way, we have a variety of guests here, welcome guests. This is a normal TRG member session of our Friday. We do live trading every day. This is the Friday version of it. If you're a guest, you may not know me. My name is Jeff. I have been trading for, gasp, gag, hang myself, 50 years this year. And I've traded futures for 30 years. I traded options and stocks before that, and I still occasionally trade stocks. I trade triple ETFs a lot. It's kind of my go-to swing trading instrument. I'm actually scaling into a triple ETF short at the moment, but that's not our topic for this session. Anyway, so I've been trading a long, long time. I trade my own money. I also trade funded accounts in a few different places. And so if you have any questions pertinent to that background, I'll be happy to answer those along the way. What else do we need to cover? Good morning, Summer. It's not 50 years young, 50 years of trading. I'm going to be 63. So, yeah, I started I was 13. I got some money for my birthday, and I convinced my dad to take me to meet his stockbroker, a guy named Al Ryan-Tees, and I bought my $1,500. I bought ComSat stock options. And ComSat was the predecessor of MCI, and I just got lucky. They got acquired, and I quintupled my money, and I thought I was a genius. My first trade, at 13. And it was all up and downhill from there. This isn't a good session to go into too much detail there. So just wanted to be really clear. Okay, once again, good morning, everybody. We're just kind of watching the pre-open here. I was giving you a quick tour of my screen. So anyway, that's the TPO view over there. The next one over is a ninja view of a very fast equivolume. These are 10-second bars. And what I'm just looking for here is the short-term energy. These numbers above and below the bars are the volume of the swings. And then this plot on the bottom is just the delta. And that's, is the trade on the bid or the ask, and by how much? And this can give you a really clear idea of the short-term range, and it can help you fade or join momentum pretty precisely. So anyway, this middle one is just another iteration of the same idea using Sierra chart and order flow. I'm looking at the deltas at the edges of the range. Like down here, there was a bunch of selling that got absorbed because we didn't drop any further, and that took us back into the range. And you can see that in the wave volume as well. These are just tapes, reconstructed tapes in Jigsaw. That far right, the entire right side of the screen is Jigsaw. And tapes for ES and NQ, I'm filtering them just a bit for like 10 contracts on ES and 3, or I think on NQ, just to kind of, see the blocks when there's big action. When the market's at an inflection point, the block activity picks up. And somebody's going to say, well, 10 isn't a very big block. No, it's not. I used to filter at 100, but with the platforms today and the sophistication of order entry systems, bigger traders are not throwing 100 lots at the book as much. They still do. They throw 500 lots at the book, but they do it in blocks, 10s, 20s at a time. So you can see bursts of them grouped together. That's the purpose of this. And are they trading on the bid or the ask? Are they lifting the ask? If we're seeing absorption and then it gets lifted, that's a really good example of where the market might puke one way or the other suddenly, and we probably will see that. So I'll call that out when I see it. Anyway, the liquidity for ES is in the middle here. The domes on the left and right of it are NQ on the left and ES on the right, with the micros next to them. I am set up here to trade a whole bunch of different accounts for this session. I think we're gonna trade the ES with micros, which is this trading panel right here. And it's copying across 7 accounts. So even if I just trade one micro, that's not a tiny position. And I might trade some minis. Normally at the open when I'm doing a Zoom session, I don't like to get in minis because if we get big sweeps, and there's any platform burps because of Zoom, I can get caught off sides pretty far. But if the platform's working good, maybe we'll trade the minis too. I'd rather trade blocks of micros just for risk management. Likewise on NQ, the bottom here will be the micro NQ. Same story there. We're copying to 7 accounts, and we could trade NQ itself. Normally, I'm a very active NQ trader. Lately, ES has been behaving like NQ, and it's got better liquidity than NQ does. So I've been trading NQ or ES like NQ. And that's why this session, again, that's kind of the genesis of this session. I was doing some of our regular live sessions in TRG, and I was telling people, I've kind of not stopped, but I've eased off on my NQ trading because the tick values in ES is better, and we're getting NQ style action over in ES. And as we were talking about that, I started telling people, you can, if you read the ES liquidity, where there's significant activity in the book that's getting traded, and I'll talk more about that in a minute. Often that can give you a really good entry into an NQ trade that you normally might not see because the liquidity on NQ is all over the map, and so it's much harder to read in the short term. So the liquidity map that you're seeing here, this is Auction Vista in Jigsaw, and the white areas are where there's relatively more liquidity, and the darker is less liquidity. And this is being plotted, just so you're clear, this is being plotted by a different dome that is just behind here from a different account that I'm connected to for full liquidity. So you can see the liquidity here, and that's what it's representing. But we're not trading that account. We're trading on a different one that's copying to the 7, like I mentioned, not trying to confuse you. So I just put another dome in front of it that doesn't have it plotted, but we're seeing a graphic of it. And this way we can watch the traded volume and stay really focused on what's going on instead of, watching the order book, which I like to see the order book graphically, but what's going on at any one individual level at any given moment, I really don't care about. So that's why it's useful to do it this way. The bottom of this plot is just the flip book, which is netting out the stacking and pulling. And I'm doing this over 5 levels. So that's what that is. If it's on the blue side, it's stacking and pulling with a bias toward going up, obviously. And the red side's kind of the opposite. So, if we're going down and people are pulling their bids out of the way and we're going down more, that's going to plot red. Likewise, if we're going up and people are pulling asks or lifting the asks, it's going to turn blue. And, that's going to show you that the energy is going that way. Anyway, this isn't going to be a class in Jigsaw. There's a lot of tools in Jigsaw that are useful. I have it narrowed down to just a couple of things I use, and that's what I'll be trading with and talking to. Again, feel free to ask questions about any of this. I just can't promise you I'm going to have a lot of time to answer them once we get going. But now I have nothing but time, so you're welcome to ask now. Let's see. Calvin, when I was 13, I bought small state stock. The commission Merrill Lynch was $150. Oh, yeah. I used to pay full round trip commissions up until like the mid 90s. So, I did that for 20 years, and it was a huge expense. Yeah, I did a $1,500 trade in ComStat. I bought equities and I also bought the options. And the equity trade had a commission that was a couple $100. And options, you paid these ridiculous spreads. So you really had the odds that you were going to make any money with options trades were really low. But the idea was just, this was the greed is good. This is 1973 when, we were in the early part of the greed is good Wall Street kind of leveraged buyout, which peaked in the early 80s. And so while that was going on, I did what the leveraged buyout guys were doing. I was just looking, and I did that for 10 years. That was the first 10 years of my trading. That's all I did. Looking for undervalued assets on balance sheets. And, Danny DeVito and Other People's Money is a good dramatic comedy movie about that process. It was a great way to make money, obviously, for the raiders doing it, the Carl Icahns of the world. But it's funny. Everyone told me it wouldn't work. All the investors that had all the experience. I was like, well, why not? Well, the premium is too high in the option. I said, yeah, but I'm buying a lottery ticket. If it expires worthless, that's built into the risk reward model, and they didn't agree with me anyway. And it worked. It worked quite a while, well for certainly 15 years. I stopped doing that and got more into futures at that point, which was like the early 90s. So anyway, that's that story. Yeah, it's funny. I remember when Daytech was one of the first discount brokers, and that became ultimately what now is TD Ameritrade after a bunch of acquisitions, and that's now Charles Schwab. But I remember when Daytech, this is like the mid 90s, you could get a Daytech account and they, discount commissions, you could trade for $10. I was like, that was mind boggling for me because I was saving a couple $100 every trade. It became a totally different world. So anyway, I did teach then too. I had a group called Dr. Jeff's Day Trade Clinic in the late 90s up until through the tech crash until about 2003. And then I had to go do some other stuff. So anyway, I will continue babbling as we watch the pre-market here, which is really quiet. Nice little range. We call this ebb and flow in TRG when we're in a range like this. And if it wasn't right before the open, this is a good set of conditions to scalp because it's very predictable. The odds it's going to bust out of this really aggressively, it'll be clear if it's doing that. And, we do still have some unfinished business up here at the highs, so we probably will go up there at some point soon. You can see right there. But again, for the meantime, we have this really predictable range. So I like to trade those a lot during the overnights and during regular trading hours, but I don't like to trade them right before the open because unpredictable stuff happens. The pre-opening shenanigans, I like to call it, as the larger traders that don't trade overnight are kind of getting warmed up and starting to put positions on and get ready for the open, all that good stuff. All right, let's see. There was one other thing. Oh, whenever you see my my plot like this on the 30-minute, it's going to run 2 volume profiles. One's going to be the Globex overnight. So that's what this is. You can see we're at the top of the overnight and we're building a high volume node up there. And that's going to be very relevant. You can also see it over there. And then, the main volume is all the way down here, at 50. Let's call that probably 58 up to about 68. You can see, big chunk of volume there from the overnight, and a low volume area here, that will probably fill in at some point too. So I run two volume profiles to see that. So the one on the right is always going to be the overnight, and this will be the regular session. And then on the middle ones here, it's just the Globex. So I'm just looking at the whole Globex by the delta. So it's delta at price. All right, so that's a quick introduction to the stuff you're seeing on my screens. Now we're picking up some energy. See how when it leaves a range, and it did that right there. So that was the range I was talking about. When it leaves a range, you always see aggression. And that, it can't leave the range without aggression. That's, just common sense statistical fact. So you can see we're kind of chewing through the bottom edge of the range. So that becomes kind of an important spot to watch. And I kind of watch the tape and see, look at all these trades at the bid or below, and yet price didn't go down. It's holding right at that price. So does that mean buyers are absorbing there? Probably. Or maybe people that were short up here are just covering their shorts. You never know what the actual trading is, but you can see the result of it, and that's what you want. We're holding price even though there was a pretty aggressive move into the bid. See right there? So that's why I like to look at these reasonably fast time frames, like 10, 20, 30 seconds. You get a real good sense of the energy of the moment, which is what scalping is all about. You know what? I should probably say that too. I'm not going to be able to teach you how I do what I do. The people in TRG hear this over and over again. So just to kind of give it a simple explanation what I'm doing. I primarily scalp, and I'm looking to scalp around inflection points. So my question I always ask myself first, which way are we going? Right now we're going down, but we're trying to hold the low. So that's the question. Which way are we going, with how much momentum, and how is it changing? If I can answer those three questions, I can usually get a trade or determine there isn't one. And right now we're in that low volume node. So, the break of this range short made sense. But here, it certainly was a long when it first touched there. But now, see, it's working the liquidity right there. This is a good example of what we're going to be doing in the live session. So it's pushing down into liquidity. And what the NQ is pushing down too. I'm going to center and reset these. I can do that from the mouse so you guys can watch. So, again, I'd expect this level to kind of hold because it's right at the bottom of the range, but there's no demand down here. These bars you're seeing, green and red bars, are a third-party product. It's an emoji tool, and all it's doing is consolidating the supply and demand for me that I'm seeing in these delta bars. So I don't want to suggest to you have to buy any kind of software to do this. You don't. I mean, clearly, we're holding the edge of the range, and there's buyers coming in there, and the sellers are getting absorbed. I mean, that's pretty obvious. It doesn't take magic software to see that. And I can turn it off, too, just so you can see what I'm talking about. Let's just do that for a second so you understand that point. So that, without the third-party tool, that's what it looks like. Everything on here is just stock Sierra chart. And as I said, that's an emoji tool, and it's just good for visualizing the supply and demand at those levels. So that's why it's running, but it's by no means a requirement for seeing this action. All right. Scott trade 995. Yep, I remember that too. And then it became a war for the lowest commissions. And then, of course, the kind of Robin Hood approach. Oh, no commissions. We'll just feed you to the wolves over at the high frequency funds using your order flow, which is basically what they do. But it's so efficient that it works as well as the old system. So what can I say? All right, we are going to open in about 7 minutes. I see we've got a little bit of a crowd finally rolling in here right at the bottom of the hour for the open. If you want to give a real quick introduction and the kind of rules of the road, JVC, one more time, just for the folks that have just come in.
Absolutely happy to do that. So some of you will be hearing this for the second time, but welcome everybody. This is a public session, of course. We do this a handful of times a year. So we've got folks from the Facebook group and other places around the web. So welcome to everybody who's not already familiar with TRG. This is one of our regular daily sessions that we do every day, where one of us, either Jeff, his other co-founder, Lee Harris, or myself, who I'm originally just a student, but I am now the community manager in TRG, and very, very devoted and dedicated to mastering this craft as best I can. And so one of the three of us trades live every day in front of everybody. And we just do a stream of consciousness and say what we see and read the order flow and execute the TRG approaches and setups. And this one is going to be a little bit different because there's actually a specific theme or topic to it, which is how you can use the ES, the activity, the liquidity, to inform what you're doing in NQ for NQ scalping, because there are a lot of NQ scalpers out there. NQ is, where all the action is, right? Everybody wants action, and it's arguable whether that's a good idea or not, but it is certainly there. And if you want to be able to trade NQ, having an edge like being able to understand what's happening in ES to guide you in NQ can be a huge deal. So that's what we're going to be talking about here today. Looking forward to it myself, even though I'm just an ES trader, a little bit of CL, but still, this is going to be really informative. If you've got a question, please do ask it, but try to give it some context. Use whole sentences and things like that, because it could be 5 or 10 minutes before Jeff sees your question. And if you just say, can you say more about that? He's not going to have any idea what that means 10 minutes later. So, just try to give a thorough question explaining what it is exactly you're talking about, or something specific on his screen, or etc. That's basically it. I think we're pretty much ready to go. We got 5 minutes, a little under 5 minutes. So
okay, cool. I'm going to throw something else up here real fast. This is from the TRG pit for those of you that are members. I think this is particularly relevant for this session, particularly since we have some visitors. So is that large enough? Is that readable?
That's not bad. A little bit, tiny bit bigger would be probably a good idea. There, that's great.
Yeah, Perfect. And then I can scroll through it maybe. All right. So what this is just the components of my scalping decisions. Time of day, I already talked about this a little bit. You don't want to trade the pre-open like you trade the overnight or like you trade the regular trading hours. This is the key to what I do. Number 2, which way are we going? Right fracking now. With how much momentum, like we just saw, a bust out of the range. And now we're trying to establish some sort of bottom, and we haven't yet, but you could scalp this either way, down here. It's got some good energy up and down, but it still has a downward bias. So that's kind of what we're looking at. And the tools I use for that, again, I'm not going to go into lots of detail on this in this session because we're just going to trade it, but these are the criteria. Number 3, sweeps. When the book is getting swept, which is just, somebody throws 500 lot at the book, and there's only 50 contracts offered at each price level, it's going to sweep a bunch of levels, and that happens a lot, particularly around the open. And so I want to keep a sense of which way those are going. If they're going both directions, sweeps can be friendly. If I'm trying to get into a long and it's sweeping down every now and then and getting bought, I can use that sweep to get into a trade. So that's why I'm watching those. Liquidity, we talked about this a little bit already. I'm watching the nearby liquidity represented on this view by the white. Where it's darker, there's less liquidity. Where it's white, there's the most liquidity. It's just a relative plot. This is Jigsaw's Auction Vista heat map. And then the range. Again, we talked about that. I was just saying we're in this ebb and flow range, and when it breaks, it'll be really obvious. Well, that's what a break looks like. When it comes down or up, it doesn't matter which way, and it gets to the edge of the range, one end or the other. If you see a sudden burst of momentum at the bottom of the range, then, it's going to either break hard down or it's going to come back into the range. And this one obviously was clearly breaking down. That's why I like to see it so quick, 10 seconds, because you can see it happening, jump in there short, and, boom, you could catch a really nice, quick little, 2-3 points. And that's again, an example of what I do. So that's the use of the range. And then the last thing is, high volume and low volume nodes. I touched on this at the beginning of the session. When the market is trading like it has been overnight, this is the Globex volume profile on the far right. There's a big high volume node down at, in the 60s, low 60s, and we're up here at 81. And what we're doing is what I said I expected to see going into the open was the high volume node we had formed at the top, which has unfinished business. So it's likely to go up there again and clean that up. But in the meantime, it's filling in this low volume node, which it does all the time, because that's an area of relative lack of interest, expressed by the lack of volume. So it's when you go into a low volume node going one direction or the other, it's really likely to go toward the direction that has the high volume node and get to it. We'll fill this in as we trade into the open. All right. So that's basically how I kind of do what I do. That's obviously members have that in the pit and have seen that before. For you guests, I just wanted you to kind of know. So, I'm not doing anything mechanical here. There isn't, when this line crosses that, we buy, we don't automatically sell the top of the range and buy the bottom of the range. You have to see how it's trading. Like right now, we are eating through the top of the range. So you wouldn't want to sell this. You'd want to be either long or watching it on the sidelines. So that's the kind of stuff that I'm looking at. See, the ask is getting lifted up. So, that doesn't happen when there's aggressive selling. Aggressive selling, the ask more or less gets held. So we're right on that inflection point. So, you can come over and see the trade on the bid and the ask and, see right here. See, now the ask is starting to absorb and we're not seeing it getting lifted. So now it's holding stronger here. So that's how you read that. And that's the kind of stuff we'll be looking at. All right. The open is coming up. If you have questions, stick them in the Zoom chat window. I'll try to get to them. There's the opening bell. This, my volume profiles on the domes here reset on the open. So we're getting a whole new volume profile. Again, remember, I'm watching 30-minute view on another screen. We're pulling back off of that unfinished business up there, which I think we're going to revisit. So it's probably an interesting spot to play long, but not yet. This is a setup in TRG we call the Open 5. It's basically the price discovery that reconciles whatever happened overnight in news or whatever. And so, the first couple of seconds of the open can be a little crazy with head fakes. But if I take a trade at this time of day, the market has to be really one directional. And right now it's not yet, but I still think it's going to go up and get that top. And it did. So let's see how it handles that now that it's up there. So there's the unfinished business. We just finished it right there. Now there's some more unfinished business. Now it's clean. So, again, it's trying to go up, but there's clearly people willing to sell up here. So not a long I want to join, and definitely don't want to be playing an NQ because look, there's a sweep in NQ that just went from 47 to 33. That you can't manage risk under those conditions. You want to either play the extremes or wait till it calms down a bit. And rather than playing the extremes of NQ, I like to play ES at the open if I'm going to play. And again, this long is kind of panning out, but it's not aggressive enough to just join it yet. Particularly with that sweep we just saw a second ago. So to the downside, that would not be a friendly sweep. This is probably going to go again to the upside. So you could scalp that long right there. But, it's finding sellers. There's some absorption. So I am not in a hurry to try to fade this. And now UB again. This is a crappy long setup. And so let me just explain why. And rather than taking a bad trade, I'll just put this back up real quickly and let you understand why. Okay, why is this such? Well, we're going up, but we're doing it with momentum that's ebbing and flowing. It's not doing it with a lot of strength, and it's leaving some gaps. Like right there, it just left a zero print. The sweeps have been down and aggressive, and that right there is the reason that at the moment I'm not interested in being aggressive long. You could just put your long on and then immediately be off sides by 6 or 8 ticks. And you just don't want to do that. And there's better opportunities coming up. But it's clearly, remember I said I'm looking for one directional. We're pretty one directional now. And it's just, again, I'm cautious about joining momentum at the open unless it's really clear where I can lean. And where would you lean here? At the high volume node down there in the low 80s, you could lean on that. Maybe lean on this 85, 86 area, but none of them are particularly good spots. But this is definitely an open 5 long right here for TRG folks that are doing that setup. Bring this back up so you guys can see it. We still have unfinished business up there. And so our A period has been pretty strong to the upside. Again, I'm just not interested in joining this long at the moment, but it is a long if you were to trade it. You want to be doing that or on your hands. And there could be a short setting up if we can get a clean top up here. I'd love to see it get, up to the big fat whole number of 4,100. But the key to trading the open well is if you can get a good entry on momentum, take it. But if the momentum is there, but there's risk, and down sweeps are the example, and we're getting them again here, not huge, but there was a 6 ticker. I'd expect it to sweep down to here somewhere, and then I might join this long if we still have unfinished business up there. That might be worth doing. We do not have unfinished business up there. So yeah, see, this is exactly what I was talking about. There's no good risk manageable place to lean on that. And you certainly don't want to sell into this much strength this early. So, this could be the spot right here to play long. It's an interesting, if the buyers pick it back up, you could play right here around 89. Watch NQ, see if it can get going to the upside. It's not. It's getting sold there. So again, that's not a good idea. There's a sweep down. So, one of the things that took me a long time to learn when I started doing this type of trading with futures is the way you get really profitable is being good at when not to trade. and when the opportunities are clear and you can play the odds, that's when you play. And this is a tricky spot. I can see a lot of people are selling into this because we're at the top of the range, and I could see those people getting stopped out if we pop up here to 4,100. I think that's really likely, but it's not a manageable idea here because of the down sweeps playing long. And again, this opening 5 trade that we do, it goes for the first 5, 10, 15 minutes, pretty much winding up now. And if I don't take a trade in this time frame, what I like to do is look for a trade on the AB. So right now we're in A period, market profile A period. And so when B opens, the rotation from B to the edge of A is often a really tradable situation. And this could be one of them. If we can pull back into the volume here and maybe fill in some of this low volume, we had a little bit there overnight, that might be an interesting spot for another pulse up. Or, again, we could potentially go all the way back here. So the short might be the right answer on a really weak break of the A range. But at the moment, again, it's not giving us enough information to really stick our neck out here. Okay, there's another weak push up. All right, they got the shorts there. You can see they're running. There's some stops getting run just by that energy. Let's see if we can see some zeros up there. Otherwise, I think we're going to go see 4,100. I just don't want to play long to that, not under these conditions. And then once we get around there, this might be an interesting spot to play right here too. Look at that. So we're seeing absorption again right here at 95. It's probably going to pull back a bit and then go up again here is my guess because of the unfinished business over there at the top. But again, getting a long on in here. I'm just very cautious at the open about joining momentum when there's sweep potential down. And right now there haven't been a lot of sweeps down. So there's definitely a bit under the market, but let's just keep watching. I think we're going to get a really good AB trade here in about 15 minutes, 20 minutes. So, and then we can start talking about the ES-NQ correlation and how to do the trade that the session's all about. It's just still a little bit too early to try to play that. Interesting spot right here. Again, you can see both ES and NQ are right at the top of the range. It's probably going to bust that one again. We cleaned up the UB, so that could be a short-term top again, but probably not. There goes NQ. It popped. It's going to take ES with it. Just to check in again on the session correlation, this is what we're seeing. Remember I said I want to see them as close together as I can. And, we're strongly up, we're correlated up, but NQ is leading by a lot. It's more than, it's more than double YM is up, and it's, just about double RTY and ES. So, I wonder how much of that is just short covering in the tech stuff. We'll look at the internals in a minute here, but yes, could I have been more aggressive and joined this momentum here on that first pullback? Yeah, absolutely, I could have done that. I'm just being conservative, which TRG members know I don't normally do. I'm just trying to really give you guys good examples. All right, so we made big fat whole number here. We're at 4,100. This is a critical spot. Let's see how it trades. This could be a great spot to fade, particularly if it can get a little higher up. That's an interesting idea. If we can push that just a bit, it's going to stop out some shorts, but we haven't had any pullbacks of significance. So I'm a little hesitant to try to play this short. It's probably going to bust there, and I'm just going to see if I can catch some ticks up here on that. That's one of the things I also like to do when we really have a big fat whole number and an extreme, assume it's going to go through it and they're going to take out retail stops. And, the next quarter number up is 2.5, that's a decent spot to probably catch a couple of ticks. I got close. It traded to 2. I didn't get a fill. So you can see it traded to 2 and then traded all the way back down to 0, 0. So that was a 2-pointer, and I just didn't get a fill, which also happens a lot when I use limit orders like this. But for this idea to work, you got to get a good fill. It's probably going to push up to 5 on this next one. So let's get up there and then see if we can fade this, if it does justify it. But right now, which direction are we going up? With what momentum? It's decent. The momentum is decent, but we're at it, an inflection point clearly. And at the same time, how is the momentum changing? Well, it's not stopping, but it's not quite as aggressive. So, again, I don't want to be long because, you're going to get suckered into a long here. If I can fade it just after a break, like, gosh, I had my order at 2.25, it traded at 2. So I scooted it up on this time. Let's see if we can break that again. Maybe we'll catch a fill at 3. Okay, so that's the end of the open 5. I'll explain more about that in just a second. Here we go. Okay, I think we're going to get another push. Maybe we can scalp some ticks on this one, and then we'll talk about the internals. Yeah, come on. Oh gosh, it did it again. It was 275 traded. My order is at 3. Talk about this is really funny. We say this in TRG all the time. When you can't get a limit fill, at an inflection point like that, you're in exactly the right spot. Okay, we finally got it. Now let's just see if we can catch some points. And how about 9 ticks, 8 ticks? I'll take it. And again, that one's copying to 7 accounts. So even though it's just a micro, that's not a tiny amount of money. It's, I could be doing it in the minis, but since the Zoom's running and can screw up the bandwidth a little bit, I want to be cautious on that. So we'll show for purposes of demonstration the micros, which I think are a great vehicle, particularly when you're teaching or learning, and you can scale. You pay a little more commissions, but you can scale. Okay, we just got 10 ticks on that last one. So this is a really good example of an edge fade. This is one of my favorite setups, particularly when we're blowing through big fat whole numbers. It's just so predictable. The shorts are going to be at 0, 0. They're going to get run over, and each time they get run over, it's going to be a stops push that is fadeable. And we saw that 3 times in a row there. Even though we're still up here, it's still a long setup. But you can make money scalping short as long as you're really disciplined about, where you want to enter and where you're looking to take profits. And that's just a matter of practice, really. Let's get back to the 30 minutes. So the top is cleaner now. And you can see this is what I mean by, we swept some stops and we had some aggression. That those 0 prints there on this 30-minute, it went through there so fast that it never traded on the left side, on the bid side. Just, boom, took all the contracts being offered and swept right through them. That's how you interpret that. So again, this is a really good spot to fade if you get a good entry, which is not the top, it's after the top goes. It also might be a good potential long, but where are you wrong if you try to play long here? That's how I like to think. I don't like to think in terms of how much money can I make, because that's furu nonsense for newbies. This trading is about managing risk. So let's say I wanted to play this continuing. There's no good place to do that right now. We could easily go to the other end of the range, which is, 79. That might not even be a good place to play. So stay out of the middle, and we're in the middle right now. So that is a good opportunity to have a look at a couple of things. Remember, I said the open 5 trade that I do is just about, kind of price discovery of the overnight and, pricing that in. That's basically what we just saw. And now we're kind of finding value. You can see the volume profile is still messy. This is the VWAP right here. So, we're filling that in. If you look at that on the 30-minute view, you can see, this was the overnight high right there. We took it out right away. Now we're kind of building volume up here. I wouldn't be shocked at all if we fill some of this in down here, but obviously we'd have to get down there first. So this is a good time to pause for a second. And I like to look, this is on one of my other monitors. I like to look at the internals about this time. Just get this over here. And, just the advanced decline, which is in the middle, and, the energy of the tick. This is reasonably positive. Not a lot of up volume, but it's really early. We've only been open for 13 minutes. And it's too early to really get a feel for the internals, but this kind of gives me context. This is strong enough. That's why we're up here. There's buying. We already know that. It's probably mostly in tech, given that it's NASDAQ. Let's have a look at that. So here's all the indexes. And so the NASDAQ's pretty green because of tech. What do we got? Workday is down, but nothing else really. And so that, that's why we're up there. United Health is the only thing significant down in the Dow, and the S&P, that's pretty green again, but we're at the top of a range. So, that's just not a great place to play long aggressively, particularly in a kind of bear market that's right, as I mentioned, right at the beginning of the session. We're right at the TPO range that we sold off from, and we're testing it, and we cleaned up that kind of poor high there. So let me just stretch this out a bit. Now that won't work. Anyway, you can see what I'm talking about there. So we're coming toward the topic of the session, which is if this quiets down enough, and it looks like it is. Notice how we're trading on the VWAP right here over in NQ as well. Obviously, it's trading a much bigger range. Boy, look at the bottom of the range. It's all the way down there. So, but we're going to start once we build out a decent range here, then we can start looking at what ES is doing, and maybe we can get some good NQ, MNQ trades as well. But again, I really want to emphasize this point. At this time of the morning, you're much better off in ES. The tick size is better. It's moving around plenty. You don't need to, there's plenty of opportunities. In other words, you just saw a few of them. And so, playing NQ with how thin it is just tricky. NQ can go, look at, we're sweeping back and forth, 5, 6, 8, 10 points at a time. That's just normal behavior for NQ. So ES is just a little bit more tradable this time of day. But as it settles down, let's watch the liquidity form and see if we can get a good edge setup. What I'd ideally like to see is I'd like to see NQ, come down to some sort of inflection point, maybe this high volume node down here, or and then in doing that, that happening at the same time that ES is trading on some big liquidity or heading towards some big liquidity. That's kind of what we're looking for here. That can give us a really, really good NQ entry one way or the other. At the moment, we're in ebb and flow again. We're working a range. It's just kind of litigating, which way it wants to go. The buyers and sellers are playing poker here. And so this is a good spot to just kind of let it play poker and, get to the B period opening and see what happens. There's a really good chance we'll get a good B to A trade here because we're pretty close to the high. And when we pulled back, this is a pullback column in Sierra. We price rejected the low. So basically that low is really clean and buyers stepped up and pushed us back up here. This is the max delta of the bar. That's the min delta. We're kind of right on both of them. That's the debate that's going on. The passive sellers are kind of on both sides of the trade right here on this big bump. So it makes sense that, the market's finding value. So let's let it do it. Okay. Let's see. I see a whole lot of stuff in the chat. So let me come over here and we'll talk to some of these while we're waiting for B period to start. Oh, absolutely true. Summer, what you said about risk management, totally agree that. NQ is totally trading like or ES is trading like the NQ. That is absolutely true, Calvin. And that's why, I like to trade the ES more, particularly right at the open when it can be a little crazy. We might have another setup coming here. We're going to bust that ledge. It's a reasonably clean top so far. I'd rather see that around the B to A. It's a little early, but it looks like we want to go up some more. There might be a fade up here coming. Where are we? We're at 4.5, 7.25. Whoops, I don't want to do that there. Let's do it here. See if we can catch another puke up to sell into. Might be, again, I tend to be, it got to 6. I was at 7.25. I'm probably a bit too conservative. Let's see if we can get another pop. I think now there's UB. Okay, we got filled. All right, so let's see again if we can just catch some ticks back the other way. And, again, you got to choose your entries to do this, but it's fairly straightforward catching, 4, 5, 6, 8 ticks. This is going to push up another level. So, we're starting to get a short squeeze going here. This could get very interesting. So I'm not going to necessarily add to that, but I'm not going to bail out yet. I think I can get some profits out of it. Here we go. It's going to retest at least 5. So let's use that as our target. So the liquidity is kind of forming right here and it's sweeping both ways. So might add to this if we can get a weak push up to 10. That would be the next puke. And, it's a little, I'm fading some strength here, which is a new trader. You got to be careful. If you are a new trader, you got to be careful doing that. Again, the key is doing it at the right spots. You don't just, pick a price line that, your software is telling you is support or resistance. That's nonsense. The market creates support and resistance as it's trading. That's why we're watching the order flow. That's literally what's going on. Okay, we're about to hit that liquidity. Can we get a fill up here? Let's try it. Again, missing by a tick. Okay, we got that. Now we can scale out of this on the way down and catch some points here, unless it just totally takes off to the races, which absolutely is possible, and I'll just hit the flat button and get out of the way if that happens. It won't cost me a lot because I'm already at an extreme. That's the point. Look how far away we are from the big fat hole number one, 4,100, that all the rookies were fading on the way up. That's just not the right spot to try it. So we're sweeping down here. I should get a fill on my first. Let's make it a little bit tighter. And I don't want to sit in trades while we're doing this. So we'll just scalp this quickly. And then we'll start talking about NQ. It's just about the right time to do that when we get the B to A trade here. So, okay, we're about to get filled on the first one. We did. Now I might let this try to become a runner, but there's buyers here. So, for that reason, that's 2 points right there. So let's take those 8 ticks on the other one. And we did. All right. So that is, that primarily is how I scalp most of the time, particularly when it's, the top of the range like this. This is fading the puke of a ledge break. And see, now it's trading back in. Jeff, why didn't you keep one on? Oh, because, you never go broke taking profits. Trying to push for more profits, a lot of new traders end up giving back everything. So I have 3 rules. Good trades tend to work right away. If you're sitting in a trade, it's probably not working, or you're early or late or something. And always take profits. You never go broke. Even taking small profits, a couple of ticks at a time, it adds up. I posted in the Facebook group a couple of days ago, doing this with micros, I made $1,000. 1, 2, 3 lots, and with virtually no risk, and that's the point. I'm not telling you micros are the only way. Under these conditions, if you're relatively new, that's a good place to start. If we got a big sweep down like we just had here from 7.5 to 4, if you were in, a 2 contract ES position long there, that could wipe out your evaluation or your account or your funded account, whatever it is you're doing. And it's just not worth taking that risk when you have sweeps that are creating that risk. Obviously, when it quiets down a bit, I'd much rather trade the minis because I get a lot more bang out of each trade. But again, it's about controlling risk. All right, so let's see. I'm going to do the questions. Yep, Felipe, we're shorting soon. We already did. I'm reading back. I'm catching up on questions here. So, okay, let's see. Jeff, from experience, NQ no longer shorts this kind of move because, you don't want to do this in NQ at all, Elena. That's my point. You need to be doing this in ES at the open. NQ is to be played when the ranges are more predictable. People always are trying to get rich quick in NQ because it moves so fast and so far. And again, you're putting yourself at the mercy of the wolves by doing that. You're much better off looking for good places to enter NQ that can play out without having to put up with all that back and forth. And the way that I describe that, in TRG all the time is if you're going to trade NQ, you have to let it come to you. You can't just, join momentum. You have to let momentum pull back. So, for example, if you were trying to be long here, these little low volume pullbacks of the pushes up, or at least the first 2, that was a decent spot. And again, that was a good spot. But now, look at the volume. It's lower on the pushes up. So, we're going back into kind of an ebb and flow up here, even though we still have, some upward momentum. So that's why you get burned. You're joining momentum that isn't really there. It's misleading you. And that happens to a lot of people in NQ, particularly at the beginning. Okay. Oh yeah, summer. A few ticks and 7 accounts. Yeah, I'm up like a couple $100 already, and all I've done, I've traded two micros twice. And again, you can do $1,000 a day doing that with virtually no risk. And it's if you have funded accounts with the evaluators, that's a great place to use their money. And the first 10,000 without a split or whatever evaluator you're at or prop firm you're at, it's a really good strategy to build up your cash. There's no question about that. A lot of people come into trading with big, giant eyes wide open. Oh, I'm going to get rich. No, the trick is to very gradually, slowly build up capital as you learn how to trade. Trying to hit the, $100,000 in a day in NQ, like Daryl posted, that one time. That's really stupid. I got to tell you, all respect to Daryl over at Apex. Those kinds of trades are really dumb in these conditions. They look great, after the fact, but it's really poor risk management, taking 20 points of heat in NQ on multiple contracts based on some, supporter demand, supplier resistance, kind of, which is meaningless. We keep hitting resistance and we keep going up through it. And yet I'm catching good shorts. How? Because watching, when the short-term momentum is waning, and those are good spots. And right now, by the way, there is not a good short at all up here. It's gonna have to slow this push up down. We're not puking the inflection points as cleanly. Like we just puked 10, and but see, it didn't pull back at all on that one. And that's why I wouldn't play this tactic at this point in the day. And we're about to get. In 6 minutes, we're going to get the B period. So I just want to put this back up, and I want to stop and finish up with the current questions and just do a little housekeeping, and then we'll see the B back into A, and we'll talk about NQ some more. Let's see. Yes, very sweepy. I'm just reading the comments. Thank you, JVC. Okay. Do I still use the power meter? The power meter, KC, is just a summary of something, whether it's the order book or it's the tape. And the only purpose of having the power meter is if you can't read the tape fast enough. And under these conditions, the way I have this displayed, there's no value to the power meter. And I want to answer your question another way, Casey. As a newer TRG member, I continually see you looking for more tools. And, power meter is another tool that's summarizing the tape for me or the order book or whatever. And in your case, I know you have a very analytical mind, and I would encourage you that less is more. Look for fewer tools. This set of tools I have here might be overwhelming for most new people. There's a lot to look at here, and this is kind of my slimmed down view. A lot of the TRG people know that. So, I normally run all 4 of the indexes with the fast views here, and I've taken RTY and YM out just because we're talking about NQ today. So anyway, and we continue to push up with no pullback. So, all right, we finally got a puke there up into 20. So this is a very interesting spot to see what happens. This could be a really sweet spot to play this short. We finally got a puke. Let's see if we can catch a nice little sweep. Let's see if we can catch 3-point sweep down here. We should see a sweep down. Maybe it won't be quite that big. Just for demonstration purposes, let's see if we can sweep to 15. It's going to play 20. There's no question we're going to play 20, but clearly there's some aggression up here. Let's get the 30-minute back up and see that was stops getting hit right there. And that's why that was a really good spot to fade. I chased it a bit. I was a little late, but the odds that you can get like 4 ticks here if you were playing this in the mini, it's a quick $50. And I'm prepared to add to this one too because of the stops. I think we might get some more stops up here. So let's get an order up there just in case. But odds are we'll pull back into this. We should finally get a pullback here because we found some stops. So won't be huge, but it'll be scalpable. And here we go. Okay, I think we're going to, oh, wow. Again, it traded right to me and didn't fill. That's so frustrating. That means I'm in exactly the right spot. There's limit orders right where I am, and some of them filled and I didn't. Okay, now we're going to get a fill, I think. Watch for a sweep down here into my order. That's a friendly sweep. Sweeps you out of the market. That's what I want. Boom, there it is. Okay, so good examples of how this technique works and how to manage a trade so far. Obviously, we haven't done anything in Q yet. We will, I promise. We're just about to go right now into B period, and that's a significant event in the ES. So let's watch how the transition, the rotation from A period, which is the periods are the half an hours if you're not familiar with market profile theory, Stedelmayer's market profile. So, and see the stops up there is one reason that was just a really great spot to, look for a quick short. Because the guys that were already short got stopped out, and so there's nobody left. So that's the spot to be the smart short, not the short that got stopped out. All right, let's see. Oh, absolutely. That's so true, Summer, about trying to catch runners. Yeah, that, you get them. I had a runner once with a micro NQ. This was back when we were doing a workshop in 2019 or 2020, and a one lot micro NQ ran for $1,000. That does happen, but you just can't look for it. If you get good entries, you might get lucky and that'll happen. Like, for example, when I'm shorting up here, before I put a target in, if it sweeps down and, just trades immediately back down to say 0, I'll catch a quick 15 points. But I'm never going to look for that because that's just so stupid and retail and newbie to try to trade toward a price like that. You have to let the tape and the energy of the trading dictate that decision. The price levels are relevant. 0 is no more important than 16 or 15. It just, people get married to price levels, and that's exactly why they get puked like that. The larger players constantly take advantage of that, and that's why they knew exactly where my stop was. That's because you have it in a really stupid place. And you're asking for that. So people to say, "Oh, I try to fade the top and I get run over." It's because you're doing it where everyone else is doing it. You have to do it after those guys get stopped out. That's the sweet spot. So hopefully that's helpful.
Consistent good performance is skill. Home run trades are luck.
Our luck, exactly. Look at baseball is a perfect example of that. The best home run hitters have horrible averages, because you get them when you get them, And look at like Moneyball in that movie. It's about statistically getting on base. That's how you score. Load the bases up. All right, so we're just getting B period here. You can see this is B period just opened, and it price rejected at the top. And now it price rejected on the pullback at the bottom. So clearly that's being litigated. But look at where the big deltas are. They're way down here. That was the level that was, in contention at 4,100, and all this energy up here is spillover from that. So you don't want to interpret this as, oh my God, the market's shooting up and get long. In fact, in the triple ETFs, I'm actually starting to put on a short, a triple ETF short. That's how I do my swing trades, because we're getting back up to the level, as I said at the beginning, that the market sold off from. And of course, we take out the shorts and just go a little bit above it. We just did that. And, and then, that's where you're going to see larger positions being positioned on the other side of the tape. Okay, so let's put the B. Okay, there's my reminder that B period's coming up. So let's watch how B period plays out. Remember, we've got stops at the initial balance high, which is right there. The initial balance low is all the way at the other end, which is what? 79.5. And that's a relatively clean bottom, if I'm seeing that correctly. Let's see. Oh, I hate that. Yeah, it's not, there's no UB down there anyway. So, and it's a long ways from where we are. So we'll look at it more closely if we get down there. But right now, obviously, B is likely to take out A's high. And that's, what you're seeing. It's just, again, getting a good entry is going to be tricky here if you're trying to play this long. This would be the ideal back around 4,100. You're probably not going to get that if you're trying to play long. So, maybe leaning on this high volume right around 10. You can see people were doing that. That's where we puked from the liquidity. The book is stacking to the upside. We're probably going to go up from here, but you can't just join it long. And there we go. This might set up another really good short here, though. Let's set up for that, and then we'll talk about NQ again. I'm going to put an order there and there. There's liquidity right there. So if that trades into me and I get filled and then we puke up a quarter or so, that should get us right into my sweet spot. I don't know that I'm even going to get that trade, though. There's a lot of liquidity sitting right in here. So I don't know that ledge is even going to go. It sure feels like the B to A is going to break A right now. And this is a very common setup we trade in TRG. B is going to take out both the session high and the IB high, obviously, and then the overnight high is already taken out down there. So, this is a pretty likely event, I'd say. Certainly one to fade, though, unless it really gets a lot more aggressive. God, I may be too conservative again here at 19, but let's see what happens if we break it. All right, we're going to start doing NQ in just a minute. You can see NQ is pushing its ledge, but it's doing it with sweeps both ways. So, trying to trade that same idea that I'm doing over here in NQ would be hard. It would run you over really fast. To Elena's point, that's exactly why I don't try to do that over there in NQ. I do other stuff in NQ, much more extreme, and we'll get to that in a minute. Let's say we break through this ledge of liquidity, and ES gets really rocking and rolling. The only place I would be looking to fade NQ is if it really pushed its range aggressively, and then the buyers just ran out of gas. And we're not going to see that here. So that's why playing this with NQ is going to be too tricky. But if you look at, here's how you can see the energy and the volume. Look at the swings here. This swing up was 5K and the pullback was 900. So clearly the energy is on the upside. You can see that in the delta too. But look at ES. It's running out of gas up here. So again, it's a great trade to fade ES up here, and it would work in NQ too. But look at how much heat you'd have to take. Look how much moving around. So that's the idea that I'm talking about. And just you want to do the NQ trade when the conditions are just a little quieter, as we will see as it gets into the initial balance. In the meanwhile, ES is a better place to play it, or the micro ES, simply because you're taking less risk and you get better tick value, even though it doesn't move quite as many ticks. So, all right, gosh, I'm really tempted to put one on short here at 17.5. It's likely that's going to be offsides, but boy, they're selling this really aggressively. And I'm sure that top's going to go, but I'm also fairly sure it's going to reverse pretty hard when it does. So let's watch the break here. It traded right up to it and didn't break it, so we touched it. So does that qualify as a B to A JVC if it just touches touches A but doesn't break it?
To be absolutely precise, it's a break. But given that Lee's approach is to exit before the break, he would be done. He would have gotten the trade, and that's that.
Yeah, you can see how the stop's up there and the evidence. It's pretty clear there's sellers up there. If you wanted to be really aggressive, you could short this here. And you probably, let's do that. What the heck? You're probably going to get offsides, but it might end up being really profitable really fast too if this area just cannot get, and I could scalp some more ticks here. Let's see, what are we at, 16? Yeah, I take 2 points. There's 8 ticks right there. I'll probably get that. But you can see it's immediately moving back into the range. So if you're going to do that, you got to take profits pretty fast. See, I just tried again to take profits, couldn't get filled. Let's see one more time here. The sellers are pretty aggressive. So again, either way here, the sweeps are working in my advantage. If it sweeps up, I get filled with more short, which is what I really want. And if it sweeps down, I'll take profits on this first one, and maybe we can get a move back up. So it doesn't want to give me the 8 ticks I was shooting for here, though, but I can probably get 5 or 6 pretty fast. So that's okay. All right, 15 so far is becoming an inflection point. So let's use that for our target and see if we can add to this. I think we're about to, it's trying to pull back. It's trying to get a buyer pullback set up here, and it might be doing it. So either way here, this will work. If we sweep down, I'll get filled. If we sweep up, I'll get added. Both of those I like. See that how it's just going back and forth here on much lower volume. That 18K came down on low volume. That's why I think we're going to go up. But that 32K came down on low volume. And, so we're just holding this area. And so it's a great place to play. You just can't be biased about which way it's going. You got to be prepared to play both. Like I'm about to get filled, and I did. Okay. So again, that's 4 ticks times 7. So, that's whatever ticks. And this really adds up. We're up $250 here on, one lot micros. So we're going to go to NQ in just a minute. I do want to take a quick break. I need to, and I know some other people probably do. Let's put the footprint back up. I don't want these to fill while I'm taking a quick break, so I'm going to cancel them. But I still think that's a decent spot to be playing. So here's what we're going to do. Let's see. Absolutely true. You guys talking about the market humbling you. That's why you have to have a really, really tight playbook as to how you're going to execute against things. You can't just look at, well, I really like, people have said stuff like this to me. I really like shorting NQ at 12,500. Why? Maybe that was significant, 2 weeks ago or yesterday or a month ago. Yeah, but it's the range that's important. You can't just pick a price and assume you're that smart to trade that price. You're fooling yourself. So, you have to look at the energy of the ranges, and that, you can see clearly now, the sellers up there that I was seeing are controlling the trade. It just couldn't trade up into that anymore. And we saw the same thing in NQ. It just was a lot more volatile in doing it. Okay, so good comment. Is there different interpretations of NQ Dome versus ES Dome? Yes, Elena, the NQ Dome moves around much more because it's so thin. There's so few bids and asks at the different levels that it's just constantly exploring ranges. So when you're looking at NQ, you have to think in terms of range. You can't think, I like 20. You have to think in terms of, I like 15 to 25. That's what I mean about it coming to you. In fact, it's doing that right now at the bottom of a range. So I just described it. 15 to 25, you're going to play this long is the place to play it. And now that's profitable. And it traded off of this ES liquidity right here. So I didn't trade that one, but it actually set up perfectly. You can see, that it pulled back. There's a price rejector down there. The demand came up. And as it did that, we traded off the edge in NQ. And as I said, you can't just pick a price. You got to give it a range and scale into it, or let it come to you, or both of those things. So that's a very significant point. Oh yeah, KC, it's not so much that they're stop hunting in the sense the way that retail traders talk about, they're looking for stops. No, that's just the auction. That's the state of the market. Large volume and momentum by definition will take out stops, because retail traders have this habit of ridiculously fading, either shorting or buying edges that are obvious, like 4,100 or 4,120, because they think the number is significant. They think that the price is significant. It isn't. If you really want to learn how to trade, take the prices off, where I've got the numbers here in the middle that show the price, just black that out and just trade the action. And the specific price doesn't really matter. It's the energy around the prices. That's how you get a feel for what's happening. Okay, so good questions, good points. Yep, that's true, Summer. It clearly, that we couldn't have gone down as much as we did in the indexes in the last couple of weeks if there wasn't heavy institutional selling of equities. Clearly, there were funds liquidating positions, and so when you see that, that those are areas that if we revisit them, and again, we are right there now in NQ. The rookies are like, oh, I'm going to get short right here. No, wrong answer. You get short on a weak break of right here. That's the right answer, and that's what I've been doing in demonstrating in ES over and over again. See, there just happened again. Traded up into that 20 area where all that liquidity was. Exactly the same, forget what the price is, the same situation in NQ, and boom, it immediately traded hard down. So we're almost at the point where we can do some NQ trades here. This is my MES, and this one here is NQ, and those trades will show up on this dome here to the left of or to the right of NQ. So I'm going to do that in just a minute. Again, I'm copying those to 7 accounts, so it's actually making more than just the micro money. It's multiplied. I do want to take a break, though. I keep saying I'm going to do that, so I just want to finish the questions, and then we will take one. So I have 7 accounts trading a micro at one time. Yes, that is what I'm doing. I'm copying the trade you're seeing to a total of 7 accounts. 5 of them are funded at the various funders, the evaluation prop firms, people call them incorrectly, but Apex, Lilu kind of guys. And then the other 2 are cash accounts of mine. So I'm doing that. And that's a way of spreading risk. I have more fees because I have to pay for the different accounts, but that's $90 a month. I can make that in a day in each account. So that's the strategy. It's a way of spreading risk. And that these evaluator firms give you some ways to use their money that is really efficient. That's one of them. So yes, Josh, good question, and that is what I'm doing. Yeah, the dome can be tricky to learn, Elena. You see patterns in the footprints and in the I like to use these fast equivolume views in Ninja as well with the geometry of the range. And these are linear regression channels, and I'm looking at the geometry of the very fast and a little bit slower. And this, what I'm looking at is the actual, supply and demand around the edges of the range. And, watching it on the dome, there's so much going on. It can, it's flashing lights, and you have to get used to that. But once you do, when I'm actually trading, and I'm trading big size in ES or whatever, this is the only place my mind is on. Look at that sweep right there. That's the kind of sweep that if you're trying to be long, you're nuts. Because the market just swept 10 ticks for absolutely no reason. And it's probably sweeping down to get long, but that would have taken you out of a pretty big loss if you were trading that in ES. So, we're litigating this high volume node, but the sweeps are aggressively down. I have not seen an upsweep recently. So the risk of being short up here, between here and 22 is not very high. So this is a decent spot to play short again for that reason alone. I'm not doing it because I want to start trading NQ and I want to take a break, but I'm going to get through the questions first, I promise. All right, let's see. Okay, cool. We're caught up. Let's go ahead and take a short break. It is 7:15 my time. Actually, it's 7:14. This is a good spot. It's probably going to sell off from here after it takes the high out again, but I'd really want to start trading NQ, and this could be a good spot to consider fading NQ, particularly, if I can get a fade on it up here somewhere. So we'll talk about that when we get back. If you look at this range right over there, it's just above it that we're at. Let me turn on the crosshairs here and see if there's something interesting like that. That's the initial balance at the top of the range right there, 597. Yeah, 600 would get really interesting in NQ. So just as a kind of a benchmark, the tie right now is 64. If some of these pushes up into this liquidity that I'm fading over here can get us somewhere around there in NQ, that'll be a really interesting spot. Actually, it's starting to happen right now. Hold on. So this is a spot you might be able to take an NQ trade. Maybe we'll take our first NQ trade here. So I'm going to try to do that. Again, there's lots of liquidity up here. I'd rather be a little farther up than that 70. I'd rather be closer to the big fat whole number at 20, at 600, but we might get a fill up there, and that would be a nice little fill, actually. So let's see what happens. Coming up decent. We should blow the top of that range. Here we go. All right, let's see if we can catch a fill on this one. So we'll do our first NQ trade based on ES liquidity. See how ES is really telegraphing that there's a good short opportunity between here and 25. And so, if that can puke us up into here, I might just catch a nice short entry. Here we go. Come on. Come on. But I'm going to put another one further up too, because again, I really like this trade at 60 at 600, 12,600, but the liquidity is pretty thick here. So I wouldn't be shocked if NQ breaks the ledge. Look how clean the top is too in NQ. So I wouldn't be surprised at all if we just pop through here and I can catch 10, 15 ticks short. Here we go. All right, let's see if this one works. Then I'm going to take a break. So we're looking to get short here at 70 and a quarter. And there's nothing magic about that number. I'm just kind of, if 65 pukes, we should get at least 5 more points out of it. And it's right on the ES. So this is what I was talking about. Here's the ES liquidity. We should puke through that. That should set that trade up. Can I get a fill up here? It's close. I'm going to grab it. Damn it. I'm chasing it a bit. I'm not getting a fill. Come on. One more push up through that. I should get filled. Oh, it traded right there again. Okay. We are filled. Now let's just see if we can catch, what do you got? $10? Pick up a $10 bill. Does that work? Catch some ticks. There it is. All right. So we got that. Again, that multiplied by 7, that's a really good example of what this session is about. We just did a perfect example. So go back and watch the recording of that if you want to see a good review. I will come back and talk to it, and I will also answer questions, but I'm going to take a break. So JVC, will you please keep an eye on the room? I will back do that in just maybe 2-3 minutes. I just want to stretch out. Hey, Dimitri's here. Welcome. We have a bunch of former TRG and friends of TRG here as guests. Hello, everybody. Anyway, we'll come back in just a minute. I just really need to stretch here. I'm an old fart. What can I say? Got a really nice profitable day going. We are now at just under $300. One lot micros, copying to 7 accounts, taking virtually no risk. I have almost no MAE here. It's negligible. All right, be right back. If you have questions, by all means, get them in the chat now. This is a really good time to ask questions, guys. I will come back and talk to questions and look for some more trades. It looks like this is setting up again, but it wasn't nearly as clean as it was last time. So be right back.
And in standard fashion, watch NQ set up the perfect trade while Jeff has stepped away.
Of course, I heard that from the top of the stairs. I came running back down. Of course it's going to do that. I mean, that's par for the course. But, I think we could get, this is going to, put it this way, this setup that I just traded is going to go on all day until the market either reverses or closes, one directionally. Now, this is a perfect way to get in for the potential move. Look where the other end of the range is, guys. It's massive range. Let me put up a big NQ plot for, you know what? Here's a good way to see this. This is my Thinkorswim when I look at just the gaps. And again, old legacy platform. I don't trade on it, but now that can't see it there. But look at, so the ES is here. NQ is the one on the left. Look at gap and go. We have a perfect gap and go opening drive. Why aren't you long? Because where do you join that? Yeah, if you got in there, great. But remember when that was actually happening and, it was trading up and down, 10 points at a time? Yeah, that looks like I could have made $10,000. Yeah, but how much risk did you have to take and where did you get in? If you got a good entry, by all means, bless your heart. But, a much more consistently profitable setup is fading the edges. And that's why so many futures traders love to fade. But what happens is all the new people come in and they fade at the wrong place. They fade, like Elena was saying, and they get run over because they're not reading. They're reading where to fade based on the price, not based on the trading and the liquidity around it. That's the point. So you just imagine if we just got to the top of the gap here, 4080, that's 12,400, 150 NQ points down, just to the top of the gap. Forget the bottom of the gap or the middle of the gap. So this is a really good day, to be thinking about fading and just consistently making money on these little breaks. But, it takes discipline and you got to make sure you're looking for it at the right places.
Another item to maybe consider, I haven't been watching, but have we had a two-sided day this week?
Oh, that's a good question.
Because today could be the day, if not.
Yeah, you know what? I don't think we have had a two-sided day.
Ooh.
Yeah. Oh, and particularly, it's the end of the month trading.
End of the month and Friday.
Yep. And so on a big move. Yeah. Oh, absolutely. Yep. We could get that. So, imagine, if you can get a good short on up here, at 21, heck. Let's throw one of those on. This is not, I'm not scalping this. I'm still going to take a break. I just put one micro on short at 20 and a quarter. We'll swing this one. Even if it just goes back to the VWAP, you can do that with the micro. It's 6 is the VWAP. And, if it goes totally offsides, probably get to 30 up here. So, we're risking $50. And you know what? If it got to 30, I'd probably put on another one. So we'll do a little swing trade while I'm taking my break here, and then we'll come back and talk more about some scalps. But I think this is going to trade to 25. So let's see if we can't get a nice little short on up here. It's certainly running out of gas. Whether, it pulls back at all remains to be seen. But the move is not as energetic as it was a few minutes ago. Let's make this a little slower just so we can see a little more time. Oh, I really like this spot here. I'm going to go ahead and do that. Just on a pullback to there. And then let's see, we got 2. We'll keep one of these, but we'll get one off here on the revisit to 20, which it's probably going to do in a second. You can see there's a bit of absorption. We should puke here. Look at the absorption holding the price. So if they can't push the price down right here, we should make a new high to short into. So let's watch that. And you could play this in NQ too. It's perfect. All right, my order's still up there in NQ. So let's see if we can get both of these at once. It's a little tricky to watch for an old person, but I'll try. So I'm trying to get short further up. I'm already short a couple in the ES here. Maybe we'll get one more right up there, and that'll give us a really nice entry into that. Let's see. Okay, we might get our NQ. Notice how I want it to blow up, and all right, it didn't quite get to me. It got to 75. Again, this one could go all the way to 600, so I'm not in a hurry to chase that, particularly when I've already got a trade on over here. So let's see. Let's put another target down there, right on that liquidity. So sweep down will fill those. And you know what? Let's scoot this guy up here. That's the spot where it's really going to get interesting up there, but we'll probably make some money in the meantime. Well, this is becoming a nice little spot to play again with a little bit more scale. You said that as I was walking around, I was refilling my coffee, which is going, I hear the machine running. So I'm going to go do that. I'm just going to leave this trade on. I'm not particularly worried about managing it because, as I said, I'm switching to kind of swing trading the micro, and then we're going to trade some more NQ. So this is an area I don't want to get too big short up here, but
here's your NQ.
And there goes my NQ, and it didn't get filled. Look at it.
Oh, no.
2 ticks. Again, I missed by 2 ticks. Gosh. And now I'm probably too low if it pushes up again. Now I probably need to move it up. So again, this is such a good example. If I had gotten filled on that, I would have gotten 20 ticks instantly, and I missed it by 2 on the fill. But you got to stake spots out like that. Otherwise, you're going to get, like Elena said, you're going to get in and get run over. And that's a question about, picking where you want to play. All right, we're in this liquidity right now. This is a key spot. Can it trade through that? Can we puke up, which will fill that one? Meanwhile, this one's running against us a little bit, but like I said, I'm not worried about that with ES as much. Boy, look at how price discovery we're getting here. It's trading very aggressively two ways. Let's get the footprint up, see what the top looks like. That's clean in ES. It's clean in NQ. I can see it on my other monitor. So in other words, when I say clean, there's not a lot of unfinished business, or, it's a reasonable, there's some zeros on the correct side, put it that way. We might be getting filled here now. Still trying to get that NQ. I think it's too low here. I think I got to push that up. Let's see. Where are we relative? Yeah, see, any one of those had been filled, they would be really profitable in that NQ, but this is what I mean when I say you got to let it come to you. And if it doesn't, you got to just say, oh, well, I was in the right place. I'm reading it well. Better luck next time to actually get filled. That's how you have to trade NQ. Otherwise, it will run you over, as many of you have said. And, you got to be really cautious about trading NQ as a trend, simply because, the movement is so intense. So, for example, right now, an interesting spot to lean long might be 45, maybe 50 area, and it's trading 70. So, that's the other end of the range. The top of the value area now is 37. Now, that's a long way down to be playing long up here, which is why the short on the push up is so much better of an idea from a risk management point of view, which is what you need to be thinking about. So, all right, this is, that's probably not a bad spot here. Let's see. Yeah, we'll do one more there and we'll take it off right there. I'm trying to get a decent swing trade short on here in ES, but I also want to not take too much risk. So I don't want to get too scaled in. That's the beauty of the micros too. When you're trying to work an area that's fairly large, you're never going to get the entry right on one try. So the micros give you, 10 tries per ES contract to get in. Boom, sweeps, just perfect. Sweeps, friendly sweeps. That's what friendly sweeps look like. It just swept right into my target. There's the second one. Okay, let's keep that one. Let's protect it. And then we'll see if we can catch a runner. This is how you catch a runner. If the bottom falls out here, I'm perfectly short from 23.25. If not, I'll take profits on the bounce up, and, it swept into my first two targets. So, and that's a really good example. If you're just reading the book and the energy, you can catch those, and they work. Okay, we got taken out of that profitably, and they work to your advantage. People always say, oh, the market ran me over. That's because you're the guy that's fading too early and then getting long last. You're the musical chairs is being played. The music stops. There's no chairs left. That's you. So in order to have that not happen, you have to let it come to you. You have to let that work to your advantage. Let the idiots get stopped out and then put your trade on. That's the right spot. Okay. I still haven't taken my break here. I'm trying, JVC. And that's not a great top, but there's still no UB up there. So, all right, let's see. Questions. Thank you, Summer. I really do appreciate it. The good feedback and whatnot. Okay. Oh, you're absolutely welcome, Casey. We're coming to the end of the session here. I will keep going, and see if we can get some more examples. I still have an order you can see up here at, above the high in NQ. I'd love to see that get filled. You know what? Actually, I'd love to see a couple of them get filled up here. You stick one up there. Really, I think that the key trade there is going to be 600. That's probably where you'll see a lot of heavy action because of where this previous top was. But right now, any of the pushes into the highs have been very shortable in NQ, as you can see. We've seen countless examples of that. All right. You know what? Rather than taking the break that I keep threatening, I'm just going to start wrapping up. We've been going an hour and a half. That's a good length of session. JVC, I'm going to ask you if given our objectives for this session, have we done that? Is there anything that you think I should have talked about that I didn't? My techniques better than most people here. Also, just anyone else in the room, this is what we call burning desires. So basically, if you have a question, ask it. If you're typing it, say, I have a question, and then put that up there so we know to wait for you. But I'll be happy to entertain any questions now from everybody. So what do you got?
Given that this is just one of the daily live sessions and it's not like we've got the time or space to dive into everything, I think it was a pretty good overview. It's tough at this stage, 2 years into TRG, for me to put myself back into the mindset of somebody who doesn't have any of TRG's stuff to think, if I didn't know any of what I know now, what would I be confused about or wondering about or what have you. So everything seemed pretty clear to me. If there's anything, I mean, this just goes to what Jeff just said. If there's anything anybody saw that you're just like, what the hell was that? This is your perfect chance to ask it. So just let us know you do have that question and type it up. And also as a quick note for maybe those who don't already know, aren't in TRG or aren't in our Facebook group, and might be in one of the other ones, exactly where Jeff is going. I was going to say, go check out the free courses. They're free and they're really, really good. Even
and a lot of the stuff that I've been talking about, unfinished business and all these terms, we give you a free course and we go through all of that stuff. So here, I'll put this link in the chat. So I don't mean to talk over you, JVC, but by all means,
not at
everybody.
You were going exactly to what I was about to say. So it's like we planned it. So, cool. If you like what you see in the free course, the paid course is, in my opinion, ridiculously, stupidly cheap.
$69.
It is so ridiculously good value for what's in that course. And we've consistently heard that feedback. And of course, if you also want to join TRG, you get the paid courses included. So
right, exactly.
There's that.
Okay, so we covered housekeeping on that. Real quickly, I'll put this document back up. This is the criteria that I use for the trades you saw me taking. And it's really simple, but there's no, when an indicator turns green or when an indicator turns red or support, resistance, we're just trading the action. The market's an auction. It's an auction among greedy, fearful, stupid human beings. Everyone, the algos took out my stop. No, it didn't. The algorithm created by the stupid, greedy human being that he turned on at the spot, that's what took you out. And, stop thinking that the market works against you and learn to read the markets telling you what's going on, because it does that. And it doesn't do that with price levels. It does it with order flow. And so that's what you want to watch. The relative energy, a simple way to, without putting you through the course, a simple way to explain it is, from my price action point of view, using structural stuff like the edges as context, which way are we going? Right now, right fracking now, which way are we going? With how much energy? Well, we're in ebb and flow at the top of a range that is consistently getting sold every time it breaks. So that's a really good setup to make money all day. Because, if the odds that we're going to continue up from here when we're already up in the NQ, 2.5%, yeah, it could happen. In a bear market, it's a short squeeze rally, and it's a good place to look for shorts. So, that's why I'm playing that into the range, even though, Jeff, we're going up, the direction's up. Yeah. And every time it pauses, it's a massive opportunity because the risk reward is so clear. And if you're wrong, look, if we got to the top of this range and I was shorting into it, like I just did with that 2 lot in the micros, which is a 14 lot, really, if I had just done that, and the top just blew out, and just buyers came rushing in, it'd be really obvious and I could get out of the way. But that rarely happens at the edge of a range. Yes, it happens constantly at places where retail people short, like 4,100. You could mortgage your house and bet all the money that those will break. But the key is to play that to your advantage, not necessarily to try to go with them or to fade them, but to use that energy whichever way you choose. We're also running really low volume for this time of the day, which is not unusual going into a holiday weekend, but it is unusual the last day of the month, which I'm kind of treating today as the last trading day of the month because Monday's a holiday and Tuesday is the actual day. Most funds are putting their books to bed today. So we're getting another example. Let's see if we can catch our NQ short again up here. Do I still have my order up there? I do. Okay. So we may get one more trade here on NQ. Let's see if we can catch a ledge break up here. And I've got 2 orders. So if it really pukes, I'll get a 2 lot. Otherwise, I'll get a 1 lot and we'll just take profits on the sweep back, which should be at least to down here, at least to 77. So we should be able to get, 7, 8, 10 points. So as soon as that fills, I'll put an order in. If it fills, it should. We're coming up here. We should break this ledge. Yeah, into this liquidity. That should happen. So here, perfect example right here. Damn it. Oh, I love that. It missed me by 2 ticks again. And this is why these trades work so well, because, you got to do it at that spot. And if you miss it, you miss it. All right, here's coming up again. This time maybe we'll catch it. But, Pardon my damn it there, but that's just so funny. I mean, if you watch the recordings of TRG live sessions, this happens to me every day, all day long, because I'm good at picking the spots. That's the bottom line. And this one's going to blow this time and I'll get filled, I think. But we traded right through that. The next liquidity is all the way up here. So that should get this one and maybe even the other one filled. Decent momentum up, but see that last burst was 6K and now 3K, so it's diminishing just a bit. Gosh, that's so funny. Traded to 84, my order at 84.75.
And look at the runner you could have had if you had
I know. Yeah, shoulda, coulda, woulda.
Exactly.
20-pointer, and that's the beauty of doing that and not trying to outsmart the index. Okay, we're going to get it again here. So let's see if we can actually do that one this time. That's just too funny. I mean, literally in my sessions, that happens to me probably 50, 60, 70% of the time I trade that, when I do my live sessions that, the spot I'm staking out. When I'm not teaching, what I'll do, if that happens, I'll just hit the market immediately if it didn't get filled with the same, with a short order. And when I'm teaching, that's just too hard to do fast. So, I'm trying to talk and think at the same time, which here we go. Okay, we're going to push, I think. Here we go. All right, come on. Let's get a fill this time. It should do. The volume's picking up, but it's not nearly as aggressive as the last push. So I think that was the sweet spot, the trade that I just missed. But we'll let this run another second here, see if they can catch some more shorts. And squeeze this up. And if there's any other questions, again, get them in the chat. We are wrapping up. I just really wanted to catch that. I had that order sitting up there for like 30 minutes, and it missed it by 2 ticks. Oh, well. I think we're about to get a fill here. There's some buying energy again. If they can run this ledge one more time, we should catch a nice entry. Okay, here we go. Come on. Let's see. The tape is not as aggressive as I'd like to see this. I may not get a fill up here, but
that's good if you can get your fill, though.
Oh, I know. If I can get it, it'll be perfect. And even this other one's perfect. So let's see if we can get them both. Here we go. Come on. Oh, it's so close. It's so close. Come on. Push it, guys. Push it, push it, push it. Come on. There we go.
There it is.
Okay, let's slap a target down there and, just for fun, catch. Boom. All right. We just got, 86 to 81. I just got 5 points. Just bang, just like that. We were in that trade for 2 seconds. You're not taking a lot of, when you're, the MAE was not measurable. That's, I coach a guy that we call video game guy, and, he does this, but he does it with, 50 lots in NQ. He's trading a big giant account and is really good at this. And I watch him, I taught him, and then he got better than me at it. He picks off those, with big positions and catches runners and, no MAE. It's going to go again. Maybe we'll catch this one up here. And again, that's not a magic number that I picked. I'm just, projecting a distance based on the energy that I think it'll go, and I'm good at that. That's why I tend to miss by a tick or two a lot, because I'm at exactly the right spot. There's 90. We're going to get to 600 here. That's probably a good spot to think about playing up there too. I just put an order above it. I put an order at 3.5. Again, assuming that if it gets to 12.6, it'll sweep through it and we'll catch some stops up there too. But boy, JVC, this is like too much fun. I want to just keep going because now we're getting really good N and Q examples, right?
Yep.
Look at the liquidity right there. We should trade into it, maybe get ES up to 30. That'll at least fill this one, maybe the other one. So let's do one more, and then I'm getting tired. I'm old. What can I say? All right, here we go. Come on, puke me, baby. Puke me, baby. Oh, gosh. Again, I'm 3 ticks away.
Again.
3 ticks away, and it's 10 ticks down. All right, come on. This is going to fill. This one will go. It's just, there it goes. Okay, let's get a quick 4-pointer there. That should be easy. Actually, this high volume node is a good target, like right down there. So, that's a little less conservative, but here it comes. Okay, boom.
There you go.
Wash, rinse, repeat, another $70 in the bank. Okay, I'm going to cancel all my orders and take a breather. So questions, comments, anything? Awesome. Yes, have a great Memorial Day weekend to you, Summer, as well. Jeff, thank you for that comment. I saw you've passed a number of evaluations, and good. Keep it up. Keep practicing. Are there any other questions? Thank you, Valente. I appreciate that. It is a good market, no question. We do it. That's why we're here, KC. I've been doing this a long time, and I love to teach. I was a college professor, and my training career. I was a trainer for IBM and a trainer for Microsoft. Trainer, not trader. I did corporate sales training and also ran a VC fund, a venture capital fund. And so I love to teach. I've taught at UCLA and College of the Desert, and a couple of colleges in Colorado, and one in London. And that's what TRG is all about: sharing our knowledge. We really like to teach. You can make more money just trading and not taking the time to stop and explain it, but that gets boring and it's lonely. So again, thank you, Jack. Appreciate it. Last call. Any final questions? Once again, thank you for coming guests. Good to see some old friends, Dimitri, for example. And anything you want to add, JVC, as we wrap up here?
One parting thought, in TRG, folks have heard me say this a bunch of times, but for those who aren't in TRG yet, there's an analogy that, as a musician, to me always makes sense, which is that this is the process of learning to sight read music that is different every day, every minute of every day. You've never seen this exact piece of music before, and you're learning to sight read it and play it extremely well every single time, the first and only time. That's really the comparison that made the most sense to me, because that's what you're learning to do. This is not learning to follow a system where this line crosses that line, or this thing turns this color, or you do something and be Pavlov's dog. When the bell rings, you salivate. That's not what this is. This is learning to actually sight read the markets. And then how do you execute against that? Well, that's practice. Lots and lots and lots and lots of practice.
Absolutely. But that's how I learned how to do that. Elena saying, every time I try that, I got run over. So did I, Elena. That's how I learned. I said, well, wait a minute. I get run over every time. So how do I be the guy who doesn't get run over? And, the answer is you have to throw all the indicators away and just look at, well, how does the running over process happen? And we saw that. We trade to liquidity, it fills up and then it pukes, and there's your opportunity. It's on that. So,
in fact, on that note, that was one of the most mind-blowing things for me being in TRG, and it's now been encapsulated in the Tickmaker courses, but is that nothing in the markets just happens. There's a mechanic behind everything. There's a party of some sort who did something that caused something, which caused something else, et cetera, et cetera. And you actually can understand everything that happened. Why did price move here? Why did the liquidity do that? Why did this happen? Why did that happen? It's not random. It's not for no reason. People always say, oh, it just took my stop for no reason, or stuff like that. No. There are reasons, and you actually can understand them, which is really cool.
Or we get the, the big boys are doing this. And that's such
smart
nonsense.
Money.
Yeah, there is no big boys, smart money. When there's a good situation in the market, it attracts capital from everybody. And it's just that the retail traders are stupider than larger money. But don't think, these pukes are a perfect example of real large money being offsides. That's why it pukes. It's the collective. There is no big boys, and that's, I hear that over and over on Twitter. The big boys are running. There's no big boys. The big boys are the collective greed and fear of the market. That's what you're looking for. And, after a while, when you start thinking that way, you start to seeing it all the time. You look at just the short-term, that's absorption and we're pushing down, it just really becomes second nature. And that's when you can really execute, but it takes a lot of practice to get to that point. It's not, go ahead.
Oh, sorry. I was going to say, and it starts to feel a little spooky and eerie when you see stuff and your immediate response is, oh, wow, look at that. This is happening. That's probably going to happen next. Boom. And then it does.
Right.
It's like, wait, what? How did I just know that was going to happen? And it's not magic. It's not voodoo. It's just you understood the mechanics at play and what has to happen if they play out a certain way. Yep. So.
All righty, let's go ahead and wrap it up. Again, thank you, everybody. Thank you, JVC.
Yes.
Yeah, we do.
And
miss
awesome
you,
to see
Dimitri.
you, Dimitri, by the way. I just wanted to throw that in there as well. So
come visit, become a member again. We'd love to have your
we miss
your input. We do miss you. All right, guys. Thank you, other guests, for coming. Thank you, TRG folks. Have a good holiday weekend. The Sunday reopen should be friggin' crazy, guys.
Yeah.
In the middle of a holiday weekend, there's going to be people looking to play that. And then, of course, the short session on Monday, and then the actual end of the month on Tuesday. I mean, next week's going to be bonkers.
Oh, God, end of the month is Tuesday. That means it's my day. Oh, boy.
Yep.
Lucky me.
Yeah. I'm looking forward to, hey, these conditions are perfect for the way I trade. I mean, I've been putting up good dollars every single day, just because these conditions for me are so predictable. It's just so easy to go in and get money.
Yeah, you've been on fire lately.
As long as I don't think about it, it's the only days I've screwed up are when I thought too much. So, all right, we'll go ahead and wrap it up. No other questions? Cool. All right, I'm going to hit the end of meeting button. So thank you once again, everybody, for coming. Thank you, JVC. And
Absolutely.
We'll see you Sunday.
Have a great weekend, everybody.